a group of individuals, typically employees in the company or people in schools and students in educational institutions. Group insurance for organization. Financial protection is provided to employees of an organization in the events of death, disability, hospitalization, and surgery under certain policy and coverage limit. With this insurance, the employees of the company will enjoy a proper protection from the employer. Next, group insurance for pupils. Financial protection is provided to pupils in the events of death, paralysis, disability, and wheelchair allowance under certain policy and coverage limit. For example, Ministry of Educational Malaysia has implemented a protection scheme for pupils of government schools and government-aided schools under the Takaful Pelajar Sekolah Malaysia (TPSM) scheme. Okay. And we are moving on to the calculation part. Okay, so how to calculate a premium for life insurance? Okay, for life insurance, the amount of premium paid depends on the chosen face value, age, gender, and smoking status. This premium calculation is based on a premium rate schedule for every RM face value. Okay, so premium equals to face value of policy over RM X times premium rate per RMX. And now how to calculate a premium for motor insurance. Motor insurance is calculated based on the motor tariff that provides the minimum premium for the insurance coverage. Okay, tariff is a list of fixed prices used to organize and control premium charges and wording of policies under the Insurance Act. Okay, so there is the table that I will show you afterwards about the tariff thing. Okay, these tariffs are regulated by law. The amount of premium depends on the factors such as the type of vehicle and its usage, the engine capacity, the type and amount of coverage desired. The premiums charged are different for each motor policy. Okay, so there are four puzzles here. Okay, so Act policy, third party policy, comprehensive policy, and fire and theft policy. So for the Act policy and the third party policy, it depends only on the engine capacity of the vehicle. Okay, so for the third party and fire and theft policy, the premium rate is 75% of the comprehensive policy's basic premium. And this policy is only depend on the engine capacity and the market value of the vehicle when you want to insure it, as same for the comprehensive policy. Okay, so this is a table actually of the shows the premium rates under the motor tariff for motor policies issued in Peninsular Malaysia, Sabah and Sarawak. Solving problems involving insurance, including deductible and co-insurance. Okay, so there are several provisions in the insurance contract that may cause the policyholder to receive compensation less than the actual loss and hence have to bear part of the loss. Okay. So the policyholder may receive less amount of money offered by the insurance company, because uh, because he or she, the policyholder, might like exit the terms and conditions under the contract they have signed. So amongst these provisions are deductible and co-insurance, which is also known as joint insurance. Okay, so we're moving to next slide. What is deductible? Deductible is an amount that must be borne by the policyholder before they can make a claim for the insurance company. Deductible is commonly found in the contract of property insurance, medical and health insurance, and motor insurance. This provision is not in the life insurance and personal liability insurance. Okay, so here is an example. Okay, so let me explain. So Madam Sohaila has purchased motor insurance for her car with the deductible provision of 300 ringgit. During the insurance coverage period, Madam Sohaila suffered 3 accidents. Oh my god. The losses suffered in March, July, August were 2,800 ringgit, 250 ringgit, and 400 ringgit respectively. State whether Madam Sohaila can make a claim for the losses suffered. If yes, state the amount of compensation that can be claimed for each loss. Okay, so we are having solution here. Okay, month. Okay, so draw a table for you to observe first month March loss, 2,800 ringgit. Can make a claim? Yes. Amount of compensation, 2,500 ringgit. Second month July loss, 250 ringgit. Can make a claim? No. Amount of compensation, none. August, 400 ringgit of loss. Can make a claim? Yes. Amount of compensation, 100 ringgit. Okay, so the 2,500 ringgit it is how you get is actually you take the loss minus the deductible provision that we have mentioned just now, 300 ringgit. The amount of the loss exceeds the deductible amount, hence a claim can be made. So that's why it's yes. And the amount of the loss is less than the deductible amount, hence a claim cannot be made for this loss. So no compensation, no amount of compensation, and you can't make a claim. The amount of the loss exceeds the deductible amount, hence a claim can be made. Amount of compensation equals to 400 ringgit minus 300 ringgit and equals to 100 ringgit. So Madam Sohaila can make claim for the first month and the last month. So for your information, in motor insurance, the policyholder is responsible for compulsory deductible of 400 ringgit if the insured vehicle is driven by an individual who is not named in the policy, who is named in the policy but is under 21 years old, and who is the holder of a provisional driving license or the holder of a full driving license of less than 2 years. Other deductibles are at the discretion of the insurance company. What is co-insurance in property insurance? Co-insurance is the cost sharing of the loss between the insurance company and the policy holder. Okay, so to calculate the amount of required insurance, you have to take the percentage of co-insurance times with the insurable value of property. Excuse me. Okay, so the first term, if the insured value equal to amount of required insurance, amount of compensation equal to amount of loss minus the deductible, where the amount of loss is less or equal than the amount of insurance purchased. Okay, the second term, if the insured value is less than the amount of required insurance, the amount of compensation equals to amount of insurance purchased over amount of required insurance times with the amount of loss and minus deductible. Okay, and third term is suffered a total loss. Amount of compensation equals to amount of insurance purchase minus deductible. So with the deductible provision and co-insurance in insurance policy, the premium becomes lower. Okay, so actually the difference between deductible and co-insurance is deductible is an amount that policyholders must pay in advance regardless of the amount of eligible benefits. Co-insurance is the cost sharing where the policyholder borne a certain percentage of the loss with the insurance company. Okay, so deductible, for the deductible you must pay in advance. Okay, so we go to the co-insurance in health insurance. In health insurance contracts, co-insurance is stipulated by the percentage per participation clause, particularly for the major medical insurance policy. In this clause, policyholder is required to bear a portion of the medical costs covered by the contract at an agreed rate after taking into account the deductible provisions, if any. For example, 80/20 co-insurance percentage participation means that the insurance company will bear 80% of the medical costs covered by the policy and 20% of and the 20% will be borne by the policyholder. So somehow the policyholder still have to bear a loss. So generally, the reasons you should get an insurance are as follows. As a financial aid to the family in the occurrence of a disability, critical illness, or death. Managing living expenses, debts, and commitments in the event that you are unable to work. Paying for high medical expenses as compensation for losses incurred. So these are the reasons why you should get an insurance. So we are having 4 guidelines to choose your best insurance. Okay, the first one, you have to find out the total coverage needed. And then the next step, understand the scope of the coverage, the terms and the conditions of the policy. And then you have to compare the premium rates and insurance benefits. And lastly, avoid unnecessary coverage.